You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 13th day of December, 2019. Friday the 13th. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered at about 30 seconds, and that will give you one-click access to the show each and every day. Now, on the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, big morning. China. Tariffs, impeachment, wow. And we had a Fed announcement this week. So if the market ever had any fuel thrown on the fire, this has certainly been a week for it. Just one right after the other, which brings us to where we are right here, right now. Let's look at the S&P 500 Emini Futures. Let's look at a daily chart. We have rolled forward now to the H contract, okay? ESH20. If you use a platform, in fact, many platforms roll you forward. They run a continuous contract, and when you came in, probably yesterday, you had been auto-rolled to the new month, which is also referred to as the front month. Back on October 3rd, the market put in an important swing low, which led us to a bullish cross that took place, so we'll call that October the 17th. Now, that was the first bullish cross we had since September the 4th. From that bullish cross, we went on to put in an all-time historic high up at 3159.75. We retraced to what we refer to as the BBC, bull bear cross. The prices above it were bullish, the prices below it were bearish, based on whatever time frame we happen to be looking at. Could be the daily, could be the 1 minute, could even be a volume chart. Okay, BBC, just remember that green line. When we're above it, we anticipate higher prices, and below it, we anticipate lower prices. Now, what you see on the chart here is a Fibonacci price extension. We've talked about it all week, because this gives us an idea based on math, purely math, nothing else, not the tariffs, not the impeachment, but just good old-fashioned math. From this important swing low to this, at the time, historic swing high, to the retracement low, a 14th century mathematician was able to tell us that once we took out this swing high, the all-time historic high at the time, that the next target overhead or the next obstacle overhead, whichever label you want to give it, would be approximately 31.89. Swing high 31.88 and a quarter. If you've been following the show each day, you've watched us just kind of creep up. Yesterday, Thursday, we got a real shot in the arm, took out that high, and then today, with the news we got regarding the China tariffs, we might expect the market to be considerably higher, but often these types of events get baked into the cake, I think is the technical term that they use. Buy the rumor, sell the news. Now, we're not having a bad day in the markets. In fact, anytime the market puts in a new all-time historic high, this type of a retracement is to be expected. If I switch this out real quick to the continuous chart, we can see that every time the S&P 500 puts in a new all-time historic high, there's one that led to the worst December since 1932. We put in another all-time historic high. Down we go. New all-time historic high. This one, we didn't quite put in a new high there, but we still got the sell-off. Now here we are, right up to today. Okay. All right, that's just a big picture look at the daily chart. We'll dive down, we'll take a look at the Concierge Trade Alerts, we'll take a look at the Logic 247 alerts, all that happened since you and I last spoke. Let me give you the numbers real quick from around the world. These are the cash markets. We'll start here in the US. Currently the Dow is down 9 points. NASDAQ is up 14. S&P 500 down 1.5, and the Russell 2000 down 8. In the commodity basket, crude oil up 72 cents on the session, trading 59.90 last. That's a gain of 1.25%. Gold up $7.89, trading 14.80.20 last. In the Asian markets, at the close, Nikkei posted a gain. We got a mover and a shaker here. Nikkei posted a gain of 598 points. That's a gain of 2.5%. Shanghai posted a gain of 52 points. That's almost 2%. And the Hang Seng added 693 points. That's a gain of over 2.5%. And in the European markets, now with the Asian markets, we have the tariff issue, and with European markets, we have the election. FTSE at the close posted a gain of 80 points. That's a gain of over 1%. DAX posted a gain of 61, and the CAC added 34. That gives us a green day in Asia, a green day in the UK. So far, it's a mixed day here in the US of A. Let me give you just a little bit of news, and then we'll go to Michael and get a recap of everything that happened this morning in the live training room. Some of you may have heard, in fact, if you've listened to the radio station for any length of time, you've heard us discuss Silk Road. In fact, there was a show a couple years ago where I took the audience to that seamy underbelly of the internet, the dark web as it's called. You need a special browser to even get to the dark net. When you run a Google search, doesn't matter what kind of Google search it is, but if you run one, let me show you. I'm not taking you to the dark net today, but I want to lay a foundation for what I'm going to share with you. This automatically searches Google for me. I don't have to go to google.com, neither do you, depending upon which browser you're using. And if you may have another default search engine set up, but type in anything. It's Christmas, so we'll type in toy. We get 13,320 million results. Okay. Now, that only represents 20% of the internet. Hard to imagine, right? 80% of this thing we call the internet cannot be discovered by Google or Yahoo or Bing, because it's the dark web. Now, why do I bring up the dark web on this fine Friday the 13th? The fellow behind Silk Road, which, as you know, was a drug marketplace, you could hire hitmen, and Silk Road was the first marketplace on the dark web to gain great notoriety. There's certainly no shortage of those places out there, or down there, perhaps I should say. The fellow behind Silk Road was a very unlikely criminal. Smart, bright, came from a good family, was raised with all the right stuff. His name, Ross Ulbricht. Ross was recently sentenced to, I forget how much time. Fortunately, everything he did with Silk Road was illegal. And if you've never read the story of how he built it, now you watch crime shows anyway, certainly not encouraging anyone to follow in Ross's footsteps, but the way he built this, the way he ran this empire from a laptop. I don't want to tell you the end of the story, but if you enjoy crime dramas. This is a true story, and it's a very worthy read. He has issued a statement. Now, why would we believe anything that a convicted murderer and drug kingpin have to say? Why would we even care? Well, as I said, Ross took a wrong turn and ended up on the Silk Road, or built the Silk Road. Doesn't change the fact that he's nothing short of brilliant. Brilliant people make stupid choices every day. Here's what Ross has recently said. The price of Bitcoin will skyrocket up to $100,000 per coin in the coming year. In a series of blog posts on December 10th, Ross, the founder of the now defunct Silk Road, predicted that Bitcoin's price will reach $100,000 in 2020. The blogs were published based on letters he wrote in prison using a type of market analysis known as Elliott wave. You hear John talk about wave counts here on the show. When Garrett comes on, he talks about wave counts. Elliott wave is not something that Michael and I use. That doesn't mean it's not valid. It's just not a tool that we've chosen to address and incorporate into the analysis and work that we do. Many people are fascinated with Elliott wave. There's a joke that if you put 10 Elliotticians in a room, they'll come up with 10 different wave counts. It's a complicated business, but if you're not familiar with it, just out of curiosity, you might Google it sometime. If it wets your whistle, hey, have at it. Many have tried to master it. Few have accomplished it. And even those who have quote-unquote mastered Elliott wave, how do we really know? Even the founder admitted as much. Ulbrich claimed the possibility to carry out such an analysis even without knowing Bitcoin's day-to-day price movements and the general condition of the market. To forecast the highs and lows in financial market cycles, Ulbrich identified extremes in investor psychology. In terms of Bitcoin, investors' emotions purportedly play a more significant role as opposed to traditional markets. As such, Bitcoin price could be artificially increased by investor expectations combined with mass psychology and through a positive feedback loop of buyer optimism. Some other industry players have also made predictions in regards to Bitcoin price movements in the upcoming year. Sources told Cointelegraph that Andy Chung, head of operations at cryptocurrency exchange OKE, sees Bitcoin surging above 14,000 in 2020. According to Chung, a Bitcoin ETF listing in the United States could be the very catalyst that brings about the price increase. Robert Beatles, president of blockchain company Monarch, reportedly suggests that Bitcoin's halving, that's Halving, cut it in half, in May could spike the price to $11,000. I would further venture to say Bitcoin will hit $2 million a coin in the next 5 years, so long as the core dev team doesn't destroy it accidentally from within. Operating under the pseudonym Dread Pirate Roberts, some of you may know that name. That's the handle that Ross used to build his evil empire. Dread Pirate Roberts. You know, you've heard that name before. I'll let you guess where it came from. Somebody already Googled it, I'm sure. The purpose behind Silk Road was to let buyers and sellers buy and sell anything, regardless of legality. Although the site listed weapons, stolen credit cards, and legal products, illicit drugs were by far the most common listing. Silk Road pioneered the use of Tor, T-O-R. That's the network software used to access the darknet, and Bitcoin escrow to conceal purchaser and seller identities and their activity. Ulbricht was arrested and sentenced to life in prison in 2015, convicted of money laundering and aiding in the distribution of drugs, computer hacking, and fraud. And then there was a whole list of charges after that. Earlier in December, Tim Draper, one of the most successful investors in the world, called for Ulbricht's release. There's a whole movement out there. There's a website. I don't want to spoil it for you. If you have some time over the weekend, just Google up the story of Silk Road. And my best advice is just stay away from the dark net. I took everybody on a tour. You can probably Google up that episode. But my recommendation is just you're going to a place where people do all of the things I just discussed. I don't care how good your antivirus software is. There's always some hacker out there just a little bit smarter than the guy that wrote the antivirus code. Sometimes I think they all work for the same place, but yeah, that's just speculation and conspiracy. So let's go to Michael, get a recap of what happened in the room this morning. When I come back, we'll take a look at the markets up close. We'll look at the Concierge Trade Alerts, the Logic 247, all that, answers to your questions, and more when I return. Michael, it's yours.
Okay, I am ready. Yes, I am ready.
All righty.
I did check on some. Okay. Oops. I think I put it on the wrong screen.
We got double screens. There we go.
That's not what I wanted. There we go.
There you go. All right, sir, it's all yours.
Okay, good. Thank you. All right, so let's start here. If you have not taken a free trial with us, and you want to take a free trial with us, go to the home page at CFRN.net. And I forgot to say, good afternoon, everyone. Today is Friday, 13th day of December, 2019. But go to here at the homepage of CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. Now, you can go directly to eminitrainingschool.com if you want to. And over here in the right-hand column, all we ask for is your name, your email, your phone number. Hit the register now button. Once you do that, you will be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the trial. Now, results. Today. Yeah, I was actually quite pleased with the results today, given that it's Friday the 13th. Today we're +8 on the euro, +4 on crude, +5 on gold. Per day, one contract, 2 hours per day. Okay. Yeah, I gotta make a copy of this and send it off to Valerie. All right. So let's get into what happened or didn't happen today. Well, had some good movement during the break. That's unusual for gold. All right. Scrolling back. Still scrolling. All right. Right in here, we wanted to see a trend develop before we started trading anything. It finally started to develop one right here, but by the time we got a trade set up, the cycle was going down too steep, so we didn't do anything on the long side. Then Trump tweeted something, and that's what made the market start moving this morning. I think there was some deal with China that they were working out or not working out, and the market started to move. I wasn't able to jump into this, but there was a shorting opportunity right there. Then the cycle got all messed up. There was a long here we got a break even on. A long here that we missed, another long that we missed. Both would have been, well, this would have been a break even trade. This would have been a profitable trade. A break even right there, a 5-tick short right there, and one last break even way over here. And I missed that long one. Then during the break, this would have been a long trade. This would have been a long trade. This would have been a short trade. This would have been a short trade, and you'd still be in that one. If you didn't get a break even right over here, you'd probably still be in it. And that was gold today. We had some good movement on the gold, thanks to China and Trump. Now, this is the euro, and when I started off the morning, I was on the wrong contract, but I still picked up 8 ticks on the first trade, and it was way down here. You can see how it corresponds to this contract. You know, we had the same short opportunity on this contract as we did on the December contract. Then I switched, and then I had a break even here. Nothing there. And there would have been a short off the BBC right here, but it would have been a break even. Okay, but we ended up with +8 on the euro. All right, on crude, we had some nice movement during the break. Let's go all the way back here. All right, there was a long opportunity right there, another one there. I missed that one. Well, I missed both of them, obviously. I think this might have been going into the high of the day at the time. That's probably why I didn't do it. I missed that. Then the cycle was going down too steep during this leg. And this was going into the high of the day, so I didn't do anything with that. Then it turned around, and there was a shorting opportunity there that I didn't get filled on. And a break even right here. And I didn't get filled on that one. And another break even right there. And this one was +4. Okay. Wow, that was all today. 1, 2, 3. Yeah, 3. Okay. Then I missed a nice short here. Another one here. A long here that would have been a break even. And during the break, let's see, we had to break this dynamic resistance, which we did right here. That would have made, well, then the cycle was going down too steep. So there would have been nothing that we could do. Okay. Now on the ES, we had what? This one over here for +6. Or maybe that was a break-even one. Yeah, that was a break-even one. This was the +6 right here on ES. We missed the long trade there. It got away from me. And then getting into the end of the day, the end of the session this morning, there was a shorting opportunity right in here. And during the break, a long opportunity there, another one there. And that was it. That was it for the day today so far. There was some good movement today, though. I'm happy to report that. Okay, so if you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. As I said, today is the 13th day of December 2019. And today we made 8 ticks in the euro, 4 ticks in crude, 5 ticks in gold, 6 ticks on the ES. Put us at plus 215 on the morning session. Today it took 61 minutes and 5 trades to get to the goal for the day. At that point, we're up $125 a contract. And we took a total of 9 trades. 9 trades. Okay. Let me bring this back over to this monitor. Oops. And go down here to this. All right. If you have not taken a free trial with us and you want to take a free trial with us, go to the home page at CFRN.net. Right over here it says 5-day free trial apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. You can go directly to this page if you want to. On this page, all we ask for is your name, your email, your phone number. Hit the register now button, and you'll be sent a confirmation link. Okay, you must click on the confirmation link. If you don't click the confirmation link, we don't know that you took the free trial. Okay. Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready to take the charts back.
I'm ready.
Okay.
Recap of the recap.
Today it took, what did it take? 61 minutes and 5 trades to get to $125 per contract.
Let's go bingo. Indeed. So, we got tariff news today. We got election results out of the UK, and I think the impeachment vote has been pushed off to next week. Correct?
I don't know.
Well, yeah, you were busy in the room.
Yeah.
So let's see.
Yeah, we had retail sales, core retail sales, both came in lower than expected.
They did, both of them lower than expected.
Yep, import prices came in as expected, and the CB leading index came in, well, lower than last month.
Okay, well, here's an update on the impeachment vote, courtesy of, who is this? Washington Post. Okay, this came out 8 minutes ago. The House Judiciary Committee quickly approved 2 articles of impeachment Friday, today, against President Trump on party line votes accusing him of abuse of power and obstruction of Congress. The panel's business-like deliberations, which lasted less than 10 minutes, followed an abrupt halt last night. They went for 14 hours yesterday. Now, we always talk about how much time they take off, and they do take off a lot of time. So this is kind of a rare thing. I'm sure they'll make much of it, but anyway. The full House is expected to vote to impeach Trump next week, though Senate Majority Leader Mitch McConnell, Republican, the gentleman from Kentucky, has said there's no chance his chamber will vote to remove Trump from office. Now, here's an interesting thing I read this morning, and I'm quoting this from memory, I think. Let me see, do I still have it on my screen? No, I don't think I do. Some fellow he's got about 500,000 followers on Twitter, so I didn't recognize his name, but apparently a lot of folks do. He says his interpretation of the Constitution says this: if the president is impeached by the House and not found guilty by the Senate, which is exactly how we expect it to play out, that his first term will be nullified, which means he could actually not only run and win the upcoming election, he could also run for a second term because the first term was nullified. Now that sounds crazy, but it sounded just crazy enough to have some element of truth in it. So I did a little bit of researching, not much. I know we have some scholars in the audience, so If we have any constitutional scholars, if you want to weigh in on that, I'm leaning towards, and Snopes says not true. And for that reason and that reason alone, I want to go the other way. But I don't know. I've never heard that before. Many of us in the audience have lived through 2 impeachments. President Nixon, I think most of us were kids or younger and probably not paying a lot of attention to politics at the time. And then, of course, President Bill Clinton. I never heard any of that talk before. So the gentleman that tweeted it out, maybe I can find him by just looking, because I followed him today, and I don't follow many people on Twitter because I honestly don't have the time to read it all. I want to see if, going back, let's see, Twitter, it should show me who I most recently followed, and his name should be right at the top of that list. Somewhere on this page, I know it says people you follow are following. There's who to follow. How do you, somebody in the audience, tell me, how do I, let's see, I've got home, explore, notifications, messages, bookmarks, lists, profile, and more. Maybe it's under the more. Moments, analytics. All right, if anybody knows the answer to this burning question, let's see, question box. I'll open the chat box, so if anybody wants to weigh in on that. Honestly, I mean, I think everyone who's a Trump fan would just love nothing more than to find out that that is true. But it's just too good to be true. I'm going to put it in that category now until we hear from someone else who actually knows what they're talking about. Okay, so we've already talked about the daily chart. We ran up, we hit that 38% Fibonacci price extension. Is that it? Is this where the party ends? Do we now get a retracement back to the BBC? Great question. Now, one dynamic on this chart has changed. We are looking at just the last leg up. If we go from the swing low to the most recent historic high, not the current brand new historic high, we can see that price did retrace to the 24% Fibonacci retracement. These short lines are the extensions. That's what we look for into the future. Retracements, well, that's supposed to be a peek into the future too, but that's based on what's already happened. This is a projection of what may happen. So looking at this low to this high, 24, okay, and the BBC, but now the dynamic has changed slightly because we got to draw those fibs all the way up there from the low to the new high. Now, based on the new high, the 24% Fibonacci retracement is going to be about 20. Oh, good. Sometimes when I open this property box, I have nothing in there. I don't know why that happens. I know if I log out and log back in, I might get it the second time, I might not. Sometimes it's there, sometimes it's not. But for those of you that do use fibs, or you're in the process of learning fibs with us, from us, you can turn on some stuff. Now let's see which area I want to look at. Text option, current value, level value, and current value. Let's just see what that looks like. Okay. Now there's a bit of redundancy here, but actually not, because over here you don't see an exact price. Here you've got the exact price. So from this low to this high, 24% Fibonacci retracement, and it's actually a 23.6, but we call it 24. Everyone does, I think. That brings the market back to 3109. It also satisfies the need to retrace to the VBC because price always reverts to the mean. In our case, the mean is that green line right there. Okay. You seen or heard from John yet this morning?
I have not.
Okay, well, when he pops in, we'll chat with him, folks. But we're going to just dive into the alerts from last night and this morning. Han posted in the chat box, since Trump won't be impeached anyway by the Senate, it doesn't matter. Well, you make a great point, Han, and to me, that is such an obvious waste of time and taxpayer money chasing something that even if you catch it, nothing happened. I mean, there's just, and I don't think there's anything to catch anyway. It comes down to perception. I'm sure that many men who've sat in that Oval Office have done far worse things, but the public perception of it was not so heavily swayed by the media. I mean, depending upon which channel you listen to, I'm referring to cable news, quite frankly, they all make a pretty good case for their side. I mean, if all you listened to was CNN, I can certainly see, especially a kid growing up in a household, or maybe you have visitors from another country staying in your home, where a certain cable news channel, it's kind of like it's our audio wallpaper, I guess. Sometimes I get tired of it and I turn it off. My wife really enjoys it, and I do too when something new comes along. Hence the term news. These cable news channels of late have become really more just cable opinion channels. So anyway, my point is, whatever you fill your head with, it's gonna eventually have some kind of an effect on you. We've talked about the popular book that says the 5 people that you spend the most time around, that you're going to become a version of it's a mashup. And I know there's an element of truth in that, because I know if I sit and make a list of the 5 people that I spend the most time around, I can see traits in my own personality, my actions, my behavior, my manner of speech that to some degree reflects their influence on my life. And the Bible's pretty clear on that too. And your mother always told you, don't be running with the wrong crowd, because pretty soon you'll become the wrong crowd. All right, let's go to the S&P. Let me give you first. We'll touch on Logic 247. Valerie just sent me a recap. We have 2 alert services. One's called Concierge, the other Logic. The Concierge is based on previous price behavior. Logic is based on whatever's going on right now in the moment, dynamic. The Concierge, those alerts are issued shortly after the Globex Open. I shoot for sometime between 6 and 9 p.m. Eastern, Sunday night through Thursday night. Once they're published, those numbers are good for the entire session. I do the same 8 markets each night. And those alerts tend to trigger more than once during the session, more often than not. When we have big directional days, sometimes we don't see the second or third trigger. But we're going to take a look at those right now. Now that's the Concierge. The Logic, which I'll show you the recap of right here. So far this week, and we are in week 71, we've issued 47 alerts since Sunday night, Globex Open, 6 p.m. Eastern. 6 of those have been stopped out, and so that represents 15%. What we average on a weekly basis is 20%. I'll show you how we ended up last week, which was, hang on, there we go, week 70. Last week we had 45 alerts for the entire week, and 4 of those guys stopped out. So 11% of actionable alerts stopped out. Earlier this week we were sitting, I think, at about 24%, and as you can see, we've now, the pendulum has swung the other way, but on average 20% per week. Now I guess while I've got that up there, we can just, I won't pick apart each one of these because this goes all the way back to Sunday night. We'll break them all down on the Concierge side. We started out with the S&P and got stopped out. The times that you see on my screen, that's Mountain Standard Time. Telegram, the app that we use for the alert service and for our discussion channels, it reads the time on your computer's clock. So it's going to reflect, when you look at Telegram, it's going to reflect your time zone. So this is Mountain Standard. So Sunday night wasn't that busy. Some Sunday nights we'll have 10, 15 alerts. We only post an alert when and where opportunity exists as it develops. If there's nothing going on, well, then you just won't see anything in the alert channel. Monday, the pace picked up a little bit. Now when you see a red X, that means it got stopped out. Z's means it just never triggered, and a thumbs up means we found the target. Okay, price found the target after the trigger. It says consider long in queue. I was in a mentoring session with someone yesterday, and he'd been on the trial, and he said, "Oh, I can see that, you know, that alert business is going real well this week, but I don't understand what it means." We do use a few acronyms, and I try to go over it each week and make sure that new people who are on the trial really understand, you know, what it's saying. But in this case, I hadn't done a perfect job. Consider long. The reason I use that terminology is, as a trader, you have to learn to make decisions. If you're just looking for somebody to give you alerts, and that's all you want to do is get the number and go trade it, then we're probably not the best option for you, because our goal is to actually teach you how to trade. So when I put out an alert, what I want you to do is I want you to go to the chart. I want you to look at it. My go-to time frame is 30 minutes, so you'll want to reference that first, and then you can go to smaller time frames for your entry. But when an alert comes out and your phone goes dee-dee-dee, or your tablet or your computer, Telegram runs on all of those. It is free. It is secure, and it's lightning fast. You can share videos and pictures. You can even make audio, phone calls. All right. Consider long. So go look at a chart, bring up the NQ if you're an NQ trader. And even if you're not, because we trade each market the same way, I think it's a good idea to use the simulator, your demo account, to run the indicators and go look at this thing. We're not talking real money here in the demo account. You need experience putting on, taking off trades. You're learning the mechanics of trading, not the psychology or any of the other stuff, but just the mechanics of putting on and taking off trades. So you're going to need practice in that area. So use the demo account, use the simulator, use the indicators. Buy the NASDAQ at 84.05, initial target 84.15. Tip, trail if possible. What that means is if you have momentum with you, when you reach this initial target, if it's starting to sputter and run out of steam, then you probably want to take any profits that you have available. But again, that's a decision that I want you to learn how to make. That's what the mentoring sessions are all about. It's also what we do every day in the live training room where Michael teaches you the core methodology. Okay, so get long 8405, initial target 8415. Once you get there, if you get there, and all systems are go, the wind's at your back, then the overhead target is 8435 on this particular alert, because that's the weekly trading zone overhead. On long trades, it'll always be the zone overhead. That's the trade 2 target. And on short trades, it will be the zone below. Now, I have no idea what day, what did I grab here? Monday, December the 9th. Let's just take a look and see what happened on that particular day. Like I say, I'm not going to break down the whole week of logic, but I am going to break down all of the concierge from last night. So we need an NQ chart. Okay. And then we need to go back to Monday, the 9th. Okay. Almost there. Okay. All right. So the time was my time, 7:27 a.m. So East Coast, that's 9:27 a.m. That's going to be this candle right here. Okay. Monday morning, 9:27 Eastern. All of our traders got this alert. Okay, and I just explained to you how to read it. And then what it looks like up close. This one's pretty simple. We open on Wall Street. We get above the BBC. We trigger in long at 84.05. You got that on the right spot? Actually, should be a little further down. 84.05. Okay. So we were coming right off of this low. Oh, you know what? That's going to go right back there because that alert was issued for the December contract in QZ. So we've got to adjust our chart for a moment. There we go. All right. So December the 9th, that's the candle the alert came out on. And the price was 84.05. Right there, right thereabouts. Okay. All right. 84.05. Now the initial target, 84.15. The trade 2 target, 84.35. So here's the trigger. Here's the initial target, 84.15 is what I'm shooting for. Okay. All right. From 84.05 to 84.15, that's 10 points. The NQ pays $20 a point. So this move, if you entered at the published entry price, exited at the initial target, that's $200 per contract traded. The swing high was 84.27, so that's 22 points, $440 per contract traded, but it's difficult to get out at a swing high because you don't know it's a swing high or swing low until after the fact. This was our trade 2 target. It did not get to the final target. Okay. Every one of the alerts will say trail if possible. Trail if possible to the zone above. Okay. How often do we make the final target? Well, we don't, and maybe we should. We haven't run the numbers on that because it's really not part of the trade is this. $84.05, $84.15. However, under favorable conditions, wind at your back, no reason to get out of a perfectly good trade. The chart on an extended move will tell you when a move is running out of steam. On the one we're just looking at, price shot up so fast on this opening candle. That's the busiest. If I open up this down here, I'll show you. That's the busiest 30 minutes of the session. You can see it. Every day it's going to stand above all the other 30-minute candles. That's volume. During that 30 minutes, we traded 45,629 contracts. Always trade with a hard stop. That's what we teach you. We never want to risk more than $300 per contract per trade with the alerts. In the room each day, we use an 8-tick hard stop on every market, S&P, Dow, Crude, Gold, 8-tick hard stop. And the reason behind that, we're attempting to teach you, Michael is working very hard each day to teach you the core methodology, which is to spot the setup. Once you see it, how to enter, how to manage it, how to trail your stop, all of those things that you need to know. What we don't want you to do is get too much on your plate at one time. So in the beginning, we make that part of it just real simple. You don't have to think about it. It's mechanical. 8-tick hard stop. If you choose, once you learn the core methodology, and many folks are just perfectly happy with the core methodology. I'm going to come in, get my couple points a day, and I'm done. Going fishing, going to do whatever it is that brings you pleasure in life. Now, if you choose that path, to just stick with those 2 points a day, if that's your goal, then you need to write yourself a plan. We talk about that in our 24/20 blueprint. Because if that's the trader that you want to be, then it's going to be very tempting many days not to throw your hat back in the ring. And there's nothing wrong with trading bell to bell around the clock if that's how you're wired. But I found over time that many folks aren't wired that way. Okay? And at least in the beginning, you're better served to focus on reaching that daily goal. Doesn't mean you can't, make an amendment to your plan at some point. But in the beginning, more than anything, you need to develop some confidence. Some confidence not only in yourself, but in the methodology that you're using. And you need to have faith that there is a definable edge. If you do anything that violates the definable edge, well, then you no longer have an edge. So back to this, from the entry to the target, it's $200. Could have been $400. Coulda, woulda, shoulda. We don't go there. This is what happened. Price then came back to the BBC. We got below it. We made a beeline for the zone below. All right. I went through all of that just so you understand how to read these. The next one would be the Russell. Be long 1636 at 1638. Okay, that gives you 2 points. That's $100 per contract traded. And again, if the wind's at your back, the zone overhead is 1643/44. All right, and that's everyone. The crude, the gold, You read them all the same, and every market we trade exactly the same. Whether you're in the live training room or if you're following on Telegram, always remember that everything that we do under the hood, it's the same thing. Okay? And again, what we do is fluid across all markets and all time frames. That one sometimes is difficult for traders who've been around a while, and maybe they've taken a lot of different courses, and they've been told repeatedly that you can't trade the S&P the same way that you trade gold, for instance, because they have different personalities. And we don't dispute that they might have a different personality, but what we do take issue with is just a statement that you can't trade different markets the same way, because Michael does a good job of showing you each and every day that in fact when he goes from the S&P chart to the gold chart, all the words that come out of his mouth are exactly the same. Really, the only thing that changes as he goes from chart to chart, of course, the symbol changes, the prices change.
And the numbers.
Yeah, the numbers change, but everything going on here, it's the same thing. Okay, so let me give you a screenshot of last night's Concierge. I brought you up to date for the week on logic. And last night I sent out the alerts for the Z contract, realized the error of my ways, and let's see, I put them out at 8:06. It only took me about an hour for it to somehow just pop into my head that I hadn't done it. So by 9:32 I had corrected the error of my ways. Alright, and they got out at 10:30, but they were updated at 9:30 my time, so that's going to be 11:30, 23:30. That's fine, 23:30. Here we go. That little weak candle right there. Okay, and it's the alert said, I don't know if you had a chance to get a screenshot or not. I'll hold it still. Go ahead. Consider being long at or above 31.91. We can see price did not make it to 31.91. What we recommend when the alerts come in each night is you go to your chart and you put 2 lines in the sand. When the alerts came out last night, you couldn't see any of the stuff off the right of my screen. That was the current candle. Of course, now we have the benefit of hindsight, okay? Which brings up a point. Anyone can be a genius with a historical chart. So when someone is showing you something or teaching you something using a historical chart, and there's nothing wrong with historical charts as long as you're aware that certain things you knew and certain things you didn't know. I mean, it's obvious right now that we had a pretty good sell-off. But when the alerts came, there was no such evidence. You'd have had your line up here at 31.91, and then the short side of this was 31.62, which we just reached right there. 31.62, and we put in a swing low of 31.59.75. So that gives us 2 1/4 points. This morning I took over the charts for just a moment while Michael was on break, and I put this little rectangle in. We were talking about where price was, how it got there, what to expect or anticipate. I drew this rectangle in to show everyone that we had found good support here, and I think it was either on this, I think it was this candle when I took the screens for a moment. And so we defined this area because of these 2 lows. I think that's what John would refer to as the 2 feet. I don't see the feet, but I know exactly what he's talking about. But we were able to put this rectangle in based on that, because Sellers were very aggressive right on down to this point here, at which point buyers became more aggressive, overwhelmed the sellers, and took price almost to the high of the session. Okay? Now, if we, right here, double top on this run up, we didn't quite get there. The high here was 88.25. This was 87.75. So they're off by a few ticks, but we still refer to that as a double top. The big tell, if you will, was here when price tried to make it a triple top. Actually, what price was doing was, trying to take out the already established swing high for the session. The market's always trying to go somewhere, do something. There's always an objective. Sometimes it seems as though it's just wandering aimlessly, but it's on a mission. Okay, so price trying to take out that high, buyers trying to take out the sellers that they know are parked here. But the sellers, what do? Okay, they already drove it down once. This is called a gift, right? Price came right back to them. They sold it again. And those who may have missed this move, they certainly don't want to miss a second opportunity, so they'll come in early. That explains why often when you're expecting a double top or any variation, triple, whatever it might be, you're waiting for price to get there so you can sell it or buy it, but it never quite gets there. And you don't want to jump in too early, but if you hang back, then you're going to be chasing it. This is where science blends with art, and over time, if you choose to use our methodology and our indicators, will help you learn to read the chart, kind of like a newspaper. It won't allow, you can't read tomorrow's newspaper today. I know a lot of websites, that's kind of a tagline in the world of trading, read tomorrow's news today, as though they could tell the future or teach you how to tell the future or tell you the future. And that's just not the case. No one can. God made sure of that when he created Adam. Whatever his reasons are, he made the decision that man cannot change the past or know the future. And the two are inextricably linked for eternity. We accept that. What we do believe, and what I'm showing you right now, and what Michael just showed you, is that you can in fact know with great certainty what the next high probability move is. Now, those two might sound like I'm saying the same thing, but I'm not. It's two very different worlds where you know the future with certainty and know what the next high probability move is. We hit the trigger, market handed over a couple points. We never triggered on the long side. Now the journey, part of reading the chart, comes here. When you put these indicators on and understand what they're telling you, it kind of changes everything. One more look without. Now, because there are zones and you can see the market turning and doing different things, consolidating, already you have some framework, but it does seem a bit random. So this will take some of the randomness out of it. Whenever price is above the BBC, we anticipate higher prices. When it's below, when price is below this green line, it happened on this candle right here, and then price got above on this candle right here. Okay? When that happens, the narrative changes. We're anticipating higher prices, we're anticipating lower prices. We wait for this very thing right here. That's a gift. Couldn't have happened at a better time. Now that price has gotten below the BBC, price gets below, then we have confirmation when we get this cross right here. Call that a bearish cross, call that a bullish cross. We're going from anticipating higher prices to anticipating lower prices. Bullish, bearish. And a little bit of market trivia, if you don't know why those terms are used, bullish and bearish, when a bull attacks you, and hopefully one never will, he lowers his head and comes up to hook you with those horns. A bear, on the other hand, if he were to attack you, he's going to rear up on his hind legs and with his paws come down with great force and rip you to shreds. Bull, bear. True story. You can Google it. Snopes will probably say it's not true, but I'm pretty sure it is. Okay, so once price gets below and is then confirmed with that cross, see, we already have a leg and a retracement by the time this particular cross happens. Well, what's the next high probability move? When price approaches the BBC from below, we expect it to be good resistance. And it was. When we encounter resistance in the market, if price can't get through it, it will turn around and head in the other direction until it finds support, which is what it did here. Now this particular candle, this is the 30 minutes prior to the open. A lot of eager expectation. Officials in China were preparing to make some statement, because we always hear our side of the story on the tariffs. We don't often hear the other side. I don't know if that's by design or if perhaps the Chinese government just don't talk about those things as freely as we do here in America. So price goes to the zone below. When price gets below the BBC, our anticipation is that it will go to the zone below. Just as when we get above, our anticipation is the zone above. Okay. All right. So we get a leg. Now, the weekly trading zone here held. And you say, no, I beg to differ. It did not. Price went all the way down to 31.63 and a quarter. Well, that's true. But look where it closed. And that's really important. Inside of a 30-minute candle, a lot happens. If you're using a 5-minute chart, you'll have 6 candles, and it will look very different. Let me just show you. I'm sure you've all seen 5-minute charts before. We have a bullish setup on our hands right here. We had a bullish cross, price pulled away, price pulled back to physically touch, leg, we put in a higher high, we're pulling back to the BBC. We expect that to be good support till it isn't. Now that's true on a 5-minute chart, on a range chart, on an hourly chart, you name it. That's everything we do. Remember, it's fluid across all markets and all time frames, and under the hood, whether you're in the room or in the Telegram channel, it's the same. Okay, so let's go back. Now this looks very bullish. Go back to the 30-minute. Not so much. What's a trader to do? The larger the time frame, the more valid the signal. Well, then why do you guys use such a quick time frame when you're trading in the room? Great question. Because if we were using a 30-minute chart, you might get a chance to see 1 or 2 setups each morning on a good day. We use that faster time frame because, again, with markets being fractal in nature, everything we do, no matter what time frame we're on, our movement, our actions, our thought process, it's identical. So that faster time frame, the range chart, gives us the opportunity to show you many trade setups over the course of just 1 2-hour period. Any idea how many trade? I'm sure you know. How many trades did you have this morning, Michael? Are you on the phone?
Let me just go check. Hang on, I have it open right here. Today we had a total of 9.
Okay.
But there were a bunch that I missed though.
Okay.
There was more than 9. It was probably about 15 in the 2-hour time span.
Okay. All right. So from 9:30, which was this candle here, to the time that the room closes at 11:30, which would be the close of this candle, we had 1 setup, and that's great. I mean, things went fine, but hopefully you understand now. Oh, okay. Because you need to see that setup again and again and again until you get to the point where you go, hey, wait a minute. He's just doing the same thing over and over again. You're on your way now. There's a lot of clutter, a lot of debris that we get in our heads because we've all tried different things. You know, some worked, some didn't work. Some we're not even sure if they did or didn't work because we never really understood it to start with. That's why we strive to keep everything just really simple. Okay. Price has rallied up to the BBC. We expect it to be good resistance until it isn't. If we go to a smaller time frame, we're going to see a different picture. Is one right and the other wrong? No. They're both relevant to the time frame that we're observing. This is why it's important that you understand the concept of multiple time frames. Now again, in the room, we don't switch from one chart to the other with different time frames. Number one, we're trying to keep it simple. We want you to see bullish cross, price pulls away, price pulls back to touch, it holds, and you have a long opportunity. When you get a bearish cross, price pulls away, price pulls back to touch, down close, you have an opportunity. You'll have more opportunities here than you will on a 30-minute. You'll have even more opportunities on the range chart. But the purpose is that you see this happen over and over and over, no matter what time frame you're on. You're waiting and watching and searching and seeking that same thing. So what's happening here? If you got short on the pullback, well, you should be showing some profit. We don't jump in immediately when price reaches the BBC. In fact, we have a zone below us at 3170. Price is currently at 3174. Is there enough room to run? That's a term that we use. If I were to get in here, is it worth the risk for the potential profit that I have in front of me? Well, yeah, 5 points, we would certainly consider that enough room to run. If I go back again to that 5-minute, in a perfect world, over the next half hour or so, price will go sideways and this BBC will rise, the two will touch, and to support our 30-minute setup, I want to see on the 5-minute chart, I want to see price get below the BBC. Now, here's the problem. If price drops right now, okay, that's going to give me just 2 points of room to run and no more. So I'd like to see the BBC creep up a little bit. And with these small candles we're printing, That's certainly a possibility. Does that mean, because of what we saw on the 5-minute chart, that you can't take this? No, not at all. Okay? What I'm saying is it's important that you understand the multiple time frame perspective, because let's say you get into this based off a 30-minute chart and things don't end up putting you into a profitable trade. You're either lost, or you start to convince yourself that, wow, I don't understand the strategy, or I don't have an edge, or it's all a big conspiracy. When you get stopped out, as long as you understand what happened, it wasn't bad luck, it wasn't any of these other things. I mean, as long as you truly have a definable edge and you know how to apply the edge and when to apply the edge, when you do get stopped out, you should be able to look at the chart and understand why. Let's say we get short right here, right now at 31.73. And price doesn't agree with us. Let's say we got short, what did I say, 31.73. We get down to the BBC here at 31.72.50. If that holds as good support, then what happens? We get a leg to the upside, and what happens on the 30-minute? You'll get stopped out. This particular setup, the reason I called it a gift is because you need so little risk on this trade to determine whether or not your analysis is valid. If you took an entry here at 31.73, about 4 points. We don't like to risk more than $300 per contract per trade on the alerts. And again, in the room, it's an 8-tick hard stop, because as you're learning the setups, we don't even want you to have to worry about that. Just know mechanical, boom, 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 8-tick hard stop. You'll learn about market structure in one-on-one mentoring sessions, in workshops, and as Michael explains it to you in the room each day. Okay, so the alert came out here. We never triggered on the long side. It gave us 2 points on the short side. Everything between these two lines in the sand, to me, that's just the market making up its mind. Does that mean I can't take a trade in between these lines? No, it doesn't. If I were not doing the radio show right now, I would probably be very interested in trading this down to the zone. We're sitting at 31.73 right now, so nice 3-point move on tap. And there's certainly the possibility, just as we did here and here, if buyers step aside, if sellers come alive, then we could glide right through that zone, because our fixed support is here. Our dynamic support is here. I drew that rectangle there because of what the market has done since I drew that. Now it belongs there. All right, let's look at the Dow. On the Dow, consider being long 28,320. No trigger on the long side. And on the short side, 28055. Yeah, there we go. Swing low, 28041. So from 41 to 55, that's 14 points at $5 a point. Some people say I wouldn't even get out of bed for that. Well, you know, that's certainly a choice. We didn't trigger on the long side. We didn't have much happen here on the short side. As you learn more about how markets work and our methodology and all of that. I'll show you on the ES. The average swing is 3 to 5 points. When I am in a directional move that has dropped from the open of this candle opened at 3176.50, call it 3176. By the time we hit the trigger at 3162, 62 to 76, 14, the average swings 3 to 5 points. In just these two candles, we've dropped 14. So we are either in an extended move, or this thing's going to run out of steam pretty quick and head in the other direction. These are things you can't know beforehand. It's just that kind of thing that you got to be real careful when someone's trying to explain something or teach you something with a historical chart. Okay? It's pretty simple to weave that stuff in there and just be on guard. Just always know what can be known beforehand and what can't. Did I expect it to turn up right here? No, because I had a alert right there to consider being short. This is the truth about trading. Your best work, your best analysis, no indicator, oscillator can predict the future. When this happens and you act accordingly, in other words, you have a hard stop in and you accept your stop out with grace. It doesn't feel like you got kicked by a mule. You're not going back to the drawing board. You simply go next. Just wait for the next opportunity. We all read, we all hear that getting stopped out's a part of trading. You got to accept it. Don't try to get around it. We all know that, but there's a little part of us that just won't ever, it seems, give up 100% on there must be a way. There's got to be a way. Remember, it was impossible for man to run a mile in under 4 minutes until Roger Bannister, is that his name? Roger Banner, maybe? Anyway, you guys know what I'm talking about. Once he broke the 4-minute mile, in the next year, I forget how many, or next couple of years, a ton of people managed to run a 4-minute mile. Let's see. Tony says that she has no audio. Is it from my end? Oh, and Michael, you already answered her. Okay, thanks.
Yes.
Okay.
Still no John out there.
Okay. All right, let me send a quick... 1 second, guys. Okay. All right. Back to the Dow. We've already covered this. So the ES didn't give up much. The Dow didn't give up much. Russell. I talked about this, I think, this morning when I was in the... yeah, I did. When I was in the room for a few minutes and I took the screens. Let me give you those numbers. The Russell, long above 1661. So we never made it up there. And these alerts are not a prediction that we're going to go to 61. It's just that if we get to 61, we either want to be long and or only consider taking long trades because we're in a bullish trend. Short side on the Russell, 1646. So that's right here. Now, going into this, we knew we had a zone right below us, so the opportunity might only be a couple points. But as long as there's at least 2 points of room to run, that's acceptable for us and our methodology. In fact, Initially, that's just exactly what our goal is to teach you how to consistently take 2 points in the S&P or just $100 per contract out of the market on a daily basis. As you grow your account size and your skill level grows, your understanding of how markets work grows, we don't think more points is necessarily the way to solve the market equation. More contracts, that's so doable because you don't have to do any additional research or analysis or draw additional trend lines. By simply increasing the number of contracts traded, that is how we believe that is your best path to get to the income level that you desire. If you can't learn to consistently take a couple points a day out of the market, if your strategy or methodology doesn't allow for that, then there's nowhere to go from there. You just you got to stay right there until you get that part handled, that firm understanding. You start to build confidence based just on the consistency, day after day after day. By the time you get really bored, that's probably the day that you can say you became a trader. Okay? All right. Now, from 46 to the zone, 2 points, the swing low was 41.20. Why did price stop there? Over here, we had a bullish cross. Buyers and sellers are duking it out. Who's more committed? Who's going to take the day? Buyers push price above the BBC. Now, that's our initial heads up when price gets on the north side. See, it happened over here too, but we never got any confirmation. Confirmation comes with that cross, okay? All right. So off we go. We do all of this. When price gets back to that point in time, that price, that important area, when price gets back there, this is exactly the kind of reaction you would expect. Not all crosses are created equal. You see, this cross led to a pretty major move in the market. When you have the market crossing back and forth and not really going anywhere, like this, those crosses don't carry the same level of importance, and you can't expect the same kind of behavior. Okay? So we get down to that area where buyers made their stand, ran price up again, almost as far as it did the first time. But we already talked about it. And all across all the indices, we didn't get that higher high. And so that brings us to here. We bounced. What's the high probability move from here? Do we find good resistance at the zone and put in another leg to the downside? Or do we continue climbing to get a retracement off the BBC? A retracement off the BBC is always nice, but you may not always get it. As price rallied up to this zone, we consolidated for an hour and a half. Now we've got a little bit of a push to the downside. The closer you initiate a position to the BBC or the zone, the less risk required. But that's also the greater potential for a false start. In other words, confirmation costs money. The more confirmation you wait for, the greater the stop loss must be. Okay? So would I get short right here, right now? Personally, no. Because number one, we're building a green candle. So even when we're selling off, it's a good idea not to sell green candles, and when you're rallying up, don't buy red candles. These red candles tell you that price is trying to get back to the BBC, just as these green candles are telling you price is trying to get back to the BBC. Let it do its thing. Let price revert to the mean. Then you have a setup. Same thing here. Let price pull back, and there's your trade. Whatever time frame you're on, whatever market you're in. All right, NQ. Okie doke. On the NQ, considering long, 85.51. Never touched it. And on the flip side, 84.59. That's right. Right in here. 84.59. On the first move down, we dropped to 84.52. So that's $140 per contract traded. Support, okay? The zone held, all right? Now what happens? Price goes back to resistance. Resistance always sends price down to support, this zone right here. And good support will always send price back to resistance, back to support, back to resistance. Now something really important just happened on this chart. We closed on the other side of the BBC, and then we opened on the other side. On the candle that opened on the other side, that candle also closed. That's a shift in the dynamic, or a change in the narrative. We've gone from anticipating lower prices to anticipating higher prices. Not because we want to, not because we have a bias of any kind. Oh, today should be an up day, you know, so I'm only going to buy. Or we can't trust our own emotions, our own gut feelings. So we have to do what the chart tells us to do. We've learned over a large enough sample size that if we will ignore our feelings and simply do what the chart tells us to do, because the chart is telling you what the market's doing. So it just makes sense to do what the market's doing, because the market is driving the bus, not us, not any indicator, not any oscillator. So we have to say now we anticipate higher prices. Doesn't mean that this obstacle won't take us out if we rally, or this obstacle, or this obstacle. Or I could even come over and draw a trend line like this. There's definitely obstacles, but based on what price did right here, opened and closed above the BBC, until I get an open and a close below it, if I'm going to take action here, I have to do what the chart tells me. Now, that's the beautiful part. I don't have to take action here. I've got a buy signal. I don't have to take it, because I'm a discretionary trader. Being a discretionary trader and a mechanical trader are two different things. Everyone needs to learn a mechanical methodology to start with. That's why we do what we do. It's very important. Core methodology, you gotta get that nailed. And then you'll take that knowledge, that ability, that life skill, and you can go do great things with it. But if you're just clicking around and, man, I tried this yesterday, and I tried this thing last week and I think it worked. Let me try that again. You can't do that, okay? You just can't. I think Tony's going to pop in here for a few minutes and say hi. About 15 minutes. Let me see. All right, yeah. Okay. So okay, maybe I've got some kind of bias. Maybe I have some reason. Maybe whatever. I don't want to go long here. Chart's telling me if I'm going to take a position, I got to go long. Okay, then I just won't take a trade here. When you're learning the methodology, you want to take every setup that your strategy or methodology puts in front of you, as long as it meets all the... Now, I've seen some strategies where if like 60% of the stuff lines up, or 70%, or if it ticks, 6 out of 10 boxes or something, then that's an acceptable trade. And I don't want to knock anybody else's, theories, but what we like to do is we like to trade only what we understand to be the highest probability. So when Michael takes a trade or I put out an alert, that is 10 out of 10, whatever the scoring system might be. We don't have any 50% trades or 70%. It's all or nothing. It's our best work, our best analysis. It's what our methodology tells us, or nothing. Okie doke. All right. Let's get through the rest of these and we'll chat with Tony for a few minutes. Let's go to Crude. Last night on Crude, alert said consider being long above 59.85. All right. Swing high 60. So that's $150 per contract traded. Back below the trigger, there's another 150. Back below the trigger, and this time it runs all the way up to 60.50. So from 59.80 to 60.50, that's a $700 per contract move. Back below the trigger, and the swing high here, 60.09. So from our number at 59.85, we got $240 per contract traded on the short side. 59.05, haven't touched that yet. On gold, okay, price did a nice job of going from zone to zone to zone to zone. We had an alert to consider being long at 1480. Swing high was 82.3. It's $130 per contract traded. And on the short side, 1469. And the swing low so far, 69.2. So no trigger on the short side. So that brings us all the way around. Tony, I'm going to open up your mic.
Okay, I'm here.
Oh, you're already there? It's open? Very good. Welcome to the show.
Thank you.
Good to have you with us.
Good to be here. It's nice to be part of the family.
Amen. Yeah, it's good to have you back. Well, really enjoyed the broadcast. Did a fantastic job of explaining things to folks. Any new news that you want to bring to us? Anything regarding the hard fork, or what? You know the news, so tell us what it is.
I haven't heard anything new. There's supposed to be a Zoom call starting in a few minutes. But one thing I forgot to mention is that Carrot Bars International has over $2 billion in assets. And companies like MasterCard and FedEx and Real Madrid, football club out of Spain, etc., they're all endorsing and supporting what Carrot Bars International is trying to do. Now, Dwayne, you're more familiar with the stock market moves.
Okay.
if something moves from, like, the KBC coin, for instance, came out at half a cent.
Okay.
On January 1st, people will be able trade 75 coins for a gram of gold. So I multiplied a half a cent by 75. That's only 37.5 cents. Will be able of your exchange into gold-backed assets will be able to be exchanged for a gram of gold, which we discovered yesterday or a few days ago is around $51 US.
Correct.
You know, and that is an incredible rate of return.
So now walk me through the math again. Tell me what the numbers are again. I'm going to jot it down. Sometimes I have to write things down and visualize them.
The KBCs, when the ICO was announced, they sold for half a cent a piece.
So 0.05. Okay.
That's 5 cents.
No, I'm sorry. 0.005. Is that right?
Correct.
Yeah, there we go.
Now, January 1st, their HSBC Bank, etc., are guaranteeing that folks will be able to exchange our KBC 75 for 1 gram of real gold, cash gold.
Okay,
so
now who's offering this guarantee?
The HSBC Bank.
Okay, I'm familiar with the institution.
They also went and looked at the vaults in Hong Kong. They have visited several of the mines that are selling their gold to carat bars for smelting. And there's also an insurance company out of Europe. So for those that miss buying the coins in the pre-sale, when they're all land on the carat bit exchange, they're only going to be probably 2 or 3 cents each. It's still going to be a really good deal, because consider if Bitcoin that came out for 10 cents had no real assets behind them other than the faith of the developer and the supporters who bought in at the beginning, like Bill Gates and probably 5 of the biggest billionaires in the tech industry. Do you not think that KBC being exchangeable for gold, as far as I know,
how does this transaction take place? Where, if someone wants to convert their KBCs into gold, as you said, where does that transaction happen? How does that happen?
They would need to find a cash gold exchange machine, or some of the people even go to Stuttgart, right to the head office, to get to know the people there and get
could it be done electronic? I mean, do you have to leave home, or could you just tell the company, I've got X amount of KBC, I want to redeem it for gold? Of course, shipping charges will be incurred, I assume. Is that a reality? Because these machines, I mean, yes, hopefully someday there'll be one on every corner, but they're just starting to come out right now. There's some.
Yeah.
I think you told us there were some in Canada. Are there any in the U.S. yet? Up and running?
Oh yes,
There are?
yes. Yeah. Another thing I wanted to mention was about the Swiss jeweler, Delacour. It's a Swiss jewelry watchmaker equivalent to Rolex. As I said, when he beta tested the K Merchant system for 6 months, but actually in the first 90 days, by accepting cryptos and not KCBs or KBCs necessarily. Could have been Bitcoin or Ether or whatever, to have a 24% increase in sales. That is very, very significant difference on the bottom line. So for business owners out there, please get in touch with us so we can send you information about the K-Merchant. Absolutely no risk. No risk for the business owners. Once someone puts up their phone with their QR code for their wallet to pay for, it's in the merchant's bank account like within a minute. So it's going to be huge once it really gets rolled out and becomes more popular. Another question, Dwayne. If a company of the size of Carrot Bars with over $2 billion in assets should decide to get listed on the stock exchange, how is that possibly going to affect the price of the coins that are backed by the gold standard bank?
Well, I would think it would have a positive impact for sure.
Do you think
to
that
what percentage? I mean, or to what degree? I mean, it's speculation at this point. Go ahead.
I was going to say, if Bitcoin, with no backing other than the faith of its supporters, could get to $10, within a few years, is there not a very good possibility that our KBC likewise, which is exchangeable for gold, might not rise even faster as people are looking for safe havens?
It's certainly possible. It's certainly possible. Because this is backed by gold, that makes it a bit of a stable coin, or what they refer to as stable coins. And
exactly.
Crypto enthusiasts love volatility. So we're really just going to have to see how it shakes out once trading begins. And that's one of the things with Carrot Bars that everyone has to kind of remember, is there's a lot of moving parts. And you might not have an interest in every moving part. Maybe the part that interests you is having gold in the form that we looked at the other day. They call it cash gold because it's something you could put in your wallet, put in your pocket, and spend as merchants begin to accept it. And I think that is, in fact, a very real possibility. When, again, now you said, I think you gave us a date of December 12th. That's today, right? No, today's the 13th. The 15th. No, that's what you said, 15th.
3 o'clock, the 15th in the afternoon is the cutoff, because that's midnight Stuttgart time.
Okay. And what exactly takes place? The two coins merge into one? Is that?
I'm not sure if they're merging on that very day or whether that's just a closing the door on pre-sale. And then maybe it'll be 5 days later at the Madrid conference that the hard fork. I'm not sure about the timetable, and
when's the thing in Madrid happening?
21st of December.
21st.
And they have mentioned that some sports figures are going to be on stage. And since the Real Madrid Football Club is a supporter endorser of Carrot Bars, I imagine some of the top soccer players are going to be there. That's going to be exciting for the sports enthusiasts.
Yeah, I would think so. What are some of the, you mentioned some of the teams that are, did you say they're endorsing this, or they're going to be on stage? What was it you said?
Well, if you go on our website, once you will see that MasterCard, FedEx, Real Madrid, Football Club, etc.
Mm-hmm.
have all hitched their wagons to Carrot Bars or supporting us. Like FedEx delivers to at least 145 countries now, that people can have cash gold sent to their homes or other products. No, I think 2020 is going to be a very, very interesting year. I'm looking forward to receiving our phones that we ordered in the spring in the pre-order time.
Mm-hmm.
I think those phones and the WIM laptop are going to be game changers.
It's going to be very, very interesting to see how this all shakes out.
I agree. I sent you this morning a file about how to get started in Carrot Bars.
Mm-hmm. Let me take a look.
So you can have that in your computer. So when someone signs up, you can send that file to them to help them walk through.
Let's see, is this the one that came today? Yeah, I've got it here. Let me just open it up. Oh, it's a PDF, okay. Guys, I'll make this available to anyone that wants it. Just let me know. And Tony, why don't you give them your phone number again?
My phone number is area code 250 550-0584.
250-550-0584. And then your Carrot Bar email?
KBMARANTO@gmail.com.
Okay, dope. All right. Well, fantastic.
The two main links to put on your screen, if possible, is the goldstandardwebinar.com. That is about a 40-minute presentation by Nitsa Nakos, who's one of the leaders of our company. And then, of course, the link with Anne-Marie's user link for people to sign up.
Is it Gold Standard Webinar?
Standard Web, yes.
Gold Standard.
Misspelling.
Yeah.
.com.
GoldStandardWebinar.com. Okay. And
then
let me get logged out over here.
can you hold for a wee minute?
You betcha.
Someone's at the door.
No, go right ahead. All right. If you guys missed the show the other day, went into a lot of detail about Carrot Bars, about the opportunity, and we covered in depth the fact that it's as speculative as Bitcoin was years ago when we first heard about it. And some would say, well, it still is. I agree. If you were here at the beginning of the show today, Ross Ulbricht, the founder of the Silk Road, and again, do we want to take financial advice from a ne'er-do-well? Well, I get the point, but he's a pretty smart guy, knows a lot about, he orchestrated that thing. So, take it with a grain of salt. Never invest in anything more than you can afford to lose. I mean, I don't care if it's a cryptocurrency or IBM. You have to be very careful in the investment world. All investments carry some degree of risk, more than others, But oftentimes, they're investments that appear to be the least risky, that can cost you everything, and vice versa. So, get advice from a licensed investment professional, talk to an accountant, talk to an attorney, and don't make impulsive decisions with your financial future. Make well-informed, intelligent decisions, devoid of emotion. That's the very best advice I can offer anyone. And this capture code just beats me up every day. I mean, every time I try to log in, on most websites I get it right. I think it's the font. Something about the font that they use.
And don't mix up the 0 and the O and the I and the number 1.
I think that's what does it. Okay, I'm in like Flynn. Okay. All right, referral links. Come on down. All right, guys, I'm going to put up a referral link on the screen for anybody that's tuned in where you can access the chat box. And then for those of you that are logged in where you can access, I will put it in the chat box
we
and
mentioned,
go to webinar. Go ahead.
As I mentioned, it's totally free to sign up.
That's right.
So that it's like we have handed you a key to a gold vault. If you're willing to take the time to polish up and research yourself. And as I said, the documents under the download folder, they're in about 10 or 12 different languages. So for those of you that English is not your first language, you just might find the documents you want in your own language. So that is very interesting too. And there's also some YouTube presentations I know in Spanish.
Yeah, there's just a ton of information, guys. So again, the registration, when you register as an affiliate using that link there, doesn't obligate you to anything, doesn't cost you anything. All it does is give you the ability to go in and find out for yourself, what this is all about. Tony and I, neither one of us work for the company. I signed up as an affiliate. Tony was very excited about it. I thought about it. It made sense to me. I understand the speculative nature of it. And with all things considered, I, certainly didn't go out and bet the farm. But if this should be the next Bitcoin, at least this time I can say I got a little piece of it, rather than, man, I missed the boat again. So
that's basically the way a lot of us feel.
Okay, a couple of questions. Let's see. Don said or asked, let's see. Okay, this is a good question. What are the fees, etc., that will be charged for the conversion to gold? Don says he has some previous knowledge of HSBC as a bank, and they tend to be a little heavy on the fees. Do you know what it will cost to convert from KBCs to actual gold?
It's very, very low.
Is it? Okay.
You just put a QR code for 75 KBCs on the cash gold exchange machine.
Okay.
And it gives you...
okay, that's all right. I forgot. Now this is being done through the machine. Okay, all right.
Right.
How quickly do they expect those machines to roll out? And I said earlier about being on every street corner. That might be a stretch, but at least in every major city. Do they have any kind of a time frame or timeline that they're trying to achieve?
We are trying to get as many out in the marketplace to beta test them. I know there's at least 500 of them that were going to be spread around. There's some in Edmonton, some in Richmond. Lumbee, a little town close to where I live, even has one.
Really?
I believe.
And I'm glad you said that. I mean, because this is the first rollout. This really is a beta test. Getting the machines in place, making sure that everything's functioning properly. So, it's reasonable. I mean, our Concierge Trade Alerts, we did a 3-year beta test on those before we turned it into an actual product. So go ahead. You were going to say something?
I think it's just like the Visa cards when they came out in the 50s. It took 2 years before they were mass adopted.
Right.
We think it'll take 2 to 3 years before all business payment transactions will probably 70% will be done with cryptos. This is what they're predicting, that in 2 to 3 years, up to 70% of all payment for everything will be cryptos. I read an article, the Royal Bank of Canada in 2020 will allow people to open accounts for their crypto coins.
Really?
Yes.
Royal Bank of Canada. Right.
Yeah, that was a news article I read just a few days ago. I think the banks that come on board with blockchain, etc., will survive the market correction the best, I think.
I see some articles. Royal Bank of Canada set to launch a cryptocurrency trading exchange. Then I see some articles that says that's not exactly what's going on. I guess this was all set in motion by a patent that they filed for. Let's see what that says. Royal Bank of Canada patent points to crypto exchange launch. The largest bank in Canada by market capitalization, Royal Bank of Canada, is reportedly opening a cryptocurrency exchange. Patents have been discovered that reveal some of the technology that RBC may implement, which could be used to bring digital currency trading to the bank's 16 million clients. Okay, this post has been updated with a recent commentary from an RBC representative.
I think that's big for Canada that the RBC Bank is jumping into the crypto space.
Yeah, I agree. I want to see what this, they say they updated the article. Okay, according to reports published November 18th, RBC says the blockchain patents do not point to the financial institution launching a cryptocurrency exchange. They go on to say, while RBC does not comment on ongoing proprietary research and development, we can confirm that these patent filings are not in direct support of a cryptocurrency exchange for clients. Now, that doesn't mean that everything you just said isn't true. It's just when people go to research this, you're going to have to, this is called due diligence. This is where you really have to do your homework. And going back to the dot-com boom, long before Bitcoin, it was those who did their research, rolled up their sleeves, were able to, because a lot of people got very, very wealthy during the dot-com days, and a lot of people lost a lot of money. Some people got lucky, right? And that's a real thing. We don't base our life or our trading on luck. But it is a real thing. We've all gotten lucky at some point in our life. But I think most of the ones who really did well out of Silicon Valley in the late 90s were ones that invested the time and energy to do the research and to be able to make the well-informed and intelligent decisions.
Well, one of the videos that I watched on YouTube was a documentary about the 1929 stock market crash. And it was interesting. They mentioned like Joseph Kennedy got out of the market entirely 2 months before it was going to crash. And he became a multi-millionaire during the Depression. So a lot of the people that were in the know got out of the market and sat on the sidelines holding precious metals to weather the storm. And there are many people lost their homes, their farms, etc., simply because they couldn't pay their property taxes. Cash was so scarce during the Depression.
Yeah, it was. And many of us grew up in households with parents, well, probably grandparents, I guess parents, who grew up in the Depression, and it made such an impact on their lives, even though we live in a world today where, you know, I don't want to say everybody's got plenty of money, but times are not as tight as they were then. But people who lived through that Depression, it's ingrained in them that you scrimp and you save and you always have extra on hand. The pantry's always stocked, that kind of thing.
Very much so. My parents said, we had a drought for 10 years in the prairies and we didn't have a paying crop. So we had to barter with neighbors for different food things and stuff like that. It's the only way the farmers survived was through bartering. When there's no cash, what have you got of value to someone else? Winston Churchill once made a statement, I'll paraphrase it, that if we do not learn from the mistakes of the past, like what caused the 1929 stock market crash, we are doomed to repeat the same mistakes. Well, the conditions in the world today are far more dire than they were in 1929. So
it's a different, it's shaded a different color, but I agree with you. It's a much different world that we live in today. What's kind of the bigger they are, the harder they fall. I mean, I think it could be that kind of a scenario.
It's not just that. There'll be a lot of the common people that will be hit very, very, very hard. If the husband loses his job, how can they pay the mortgage? Can they buy the food for the family, etc.? It's going to be hard. And this is why the company is trying to get cash gold in the hands of as many people as possible, that they can take one of those little 1/10 of a gram note to a grocery store in 2 or 3 years. They'll be so common. And say, okay, this is worth about $11 this morning. I need this and this and this, Mm-hmm. So I think
I got to say that in the face of coming adversities, that makes more sense to me than putting 1,000 cans of tuna fish in my garage.
I agree.
Preppers, they've got. I mean, that's a real thing. They have conventions, and people take that very seriously. I don't know if people are building bomb shelters anymore. That was a thing back during the Cold War in the late 50s.
Yes.
Now, Don also said, you mentioned something about the bank going public. What exchange? Do you know what exchange it's going to trade on?
Because they're headquartered in Germany, I would assume they would try the German exchange first. I'm not sure exactly I know nothing about the details. Those will be released, I believe, on the 15th of December.
Okay. And
most likely there will be a video on the official Karatbars channel on YouTube, mm-hmm. right from Brazil. About what that is.
So the German exchange is the Frankfurt. I'm curious if it's going to trade here in America on one of the major exchanges, like the NASDAQ or the big board, or if it will be considered an over-the-counter type of stock. And I'm sure that information may not have been released, or maybe it has. Do you know?
No, okay. I do not know. I do know the company's long-term goal is to be listed on at least 5 of the big boards.
Okay. All right.
And I presume New York will be one, stock exchange, London, Hong Kong, Australia. I'm not sure which, but
okay.
The thing is, I think that is just a natural growth factor of the financial ecosystem. As I said, I don't know the details. All I know is it makes common sense that this should be happening sometime. And I think it will have a very positive effect on the Caribbean exchange and the volume of other people trying to pick up our coins after January. So
Don says that he's had some painful experiences with the BTC for transaction speed. I don't think that's something that we have to worry too much about, because you're not going to be, I don't think you'll be running out to convert your coins to gold on a daily basis. But these are all things that we'll find out in the near future. Let me scroll down through the rest of these questions. Okay, Wayne, you got the link to work. Very good. Don says he doesn't ever see cryptocurrency being adopted as a normal consumer business transaction. It will be done. Well, that's my opinion. I mean, of course, you've got yours, I've got mine, but it just makes more sense. And as far as speed, you know, we're in the infancy of this thing. A cryptocurrency transaction doesn't have to. There's lightning speed, quick or quicker than a credit card, because of the technology behind it.
Well, we have Carrot Pay for online purchases, and
right.
then the K Merchant for retail. So there are all the parts are going to be put into place by January 1st. The entire ecosystem will be fully active as of January 1st, is what I understand. They have worked really hard over the past 3 years coming into the crypto digital world, and it's been interesting.
Yeah, it's an interesting journey. So again, guys, do your own due diligence, take the link, roll up your sleeves, go in there. Don't wait for somebody else to, to be the leader, or to tell you what you should believe or what you should think. Go find out for yourself.
I watched that gold standard webinar several times because there is so much information that Nita presents. And right at the end, she has the different packages, profit packages, or the phone, or the computer package, etc. And the prices are all there to be seen.
There's a ton of information out there. And again, you can, Tony and I, we're affiliates. We're in this the same as anybody else. Get a hold of the company, call them. They accept visitors. If you want to come and visit, you can call by phone.
Let them
you
know
can
in
email
advance.
support. Yeah, you got to book an appointment, same as anywhere else. Yeah. But whatever questions you have, please feel free to share. And we have 2 discussion groups in Telegram. So as you find answers to your questions, whoever you are, and whatever questions you have, if it's something we haven't discussed here, share it with the community. That's exactly what these types of communities are all about, because there's power in numbers. 2 heads are smarter than 1. All of that stuff. Tony, let's see if there's any final question. Bob says to please call when you're coming down his way.
I don't have his phone number anymore.
Okay. Bob, how do you want to rectify that? Tony doesn't have your phone number.
He has mine. He can text me anytime.
All right, Bob, you got her number, so send her a text.
Unless he lost his phone with the phone number in.
We'll make sure you guys get connected.
I'd love to see him again.
All right, Tony, listen, thanks so much for coming on again today, and I'll talk with you sometime this afternoon.
Okay.
Okie doke. Thank you so much. I really appreciate it.
Thank you for having me.
Oh, you bet. Have a great weekend.
Thank you, and same to you. Bye-bye, everyone.
All right, bye-bye. Okay, guys, up on the screen, 30-minute S&P chart. Okay, we talked about this pullback to the BBC, right? And then we drill down to a 5-minute chart. Now, when we were talking about that, remember what we said? Where were we? We were back here. Let's see, we were probably right in this area here. No, we were here. So what we were talking about was we wanted to see price get below the BBC on the 5-minute chart. So I said, in a perfect world, what would happen is we would kind of go sideways. It's probably here where I put the circle, but anyway, if the market just kind of rolls sideways, that would give time for the BBC to rise up to meet price. Once this candle right here could be the one, okay, we want to see a red candle close below the BBC. Then we want to see a candle open and close below the BBC. And then the narrative goes from bullish to bearish. If that's what happens right here, that will support the 30-minute chart. That is how you use multiple time frames. If you'll, again, invest the time to learn how markets work, find a strategy that gives you a definable edge, such as the one you see here on the show, day in and day out. Develop some patience, develop some discipline. You too could become a consistently profitable trader. Let's go to our good word for the day as we head off into the weekend. Today we're going to talk about setting goals. We all know we're supposed to have goals. In fact, one of our goals is to start setting goals, right? Acts 16:7. The Spirit of Jesus did not allow them to go there. The entire scripture says, then coming to the borders of Mysia, they headed north for the province of Bithynia. But again, the Spirit of Jesus did not allow them to go there. We've all been given individual gifts and goals in life, and God is the giver of both. Jesus said in John 3:6, that which is born of the flesh is flesh, and that which is born of the Spirit is spirit. When you have a desire that's born of the flesh, don't expect God to fulfill it. It's okay to admire and learn from gifted and successful people, as long as you don't try to duplicate them. It's okay to emulate their good character qualities and seek their input, as long as you first go to God, the architect of each of our lives, and ask Him to show you His blueprint for your life. Because that person that you admire, that person that you emulate, that you draw wisdom from and encouragement, they have a blueprint very different than yours. Now imagine I'm trying to build a house. Maybe I get started, I got my foundation, poured, and then you come along and you show me the house that you're going to build. And that's a very fine house. I like it much better than my house. So I take a copy of your blueprints and I try to build your house on my foundation. That probably won't work out well in most cases. Remember, you have a unique blueprint. God created you for a destiny that only you can fulfill. If you're not sure what your destiny is, if you don't have a clear picture of God's blueprint for your life, just ask Him. Talk to Him about it. Even though David's desire was to build the temple, God told him his son Solomon would ultimately build it. David's job was to raise the money and materials for the project. If you're a make it happen sort of person, that kind of thinking will go against your grain. Because if you want to do it, you don't want to pave the way for somebody else. So think about this. They were forbidden by the Holy Spirit to preach the word in Asia. After they had come to Mysia, they tried to go into Bithynia, but the Spirit did not permit them. So passing by Mysia, they came down to Troas, and a vision appeared to Paul in the night. A man of Macedonia stood and pleaded with him, saying, "Please come to Macedonia and help us." Now, after he had seen the vision, immediately we sought to go to Macedonia, concluding that the Lord had called us to preach the gospel to them. That's Acts 16:6 through 10. So here's the bottom line. Let God set your goals, and you'll always build the right house. And that's a good word for the day and the week. It is the weekend, so be sure to spend some quality time with your family. Of course, I'll see you all in church on Sunday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.